What's up everybody, and welcome to another episode of Drive to Thrive. So as you can see, weather has cleared up. That means I'm back outside here, and in today's episode I want to talk about what the flying fudge just happened to the stock market this last week. Was unbelievable. And is this just the beginning of something bigger, or is this possibly a great buy in the dip opportunity? So we'll go over some charts, we'll take a look at my watch list, and also I'll let you know what I think can happen in the next 1 to 3 months. So let's buckle up, sit down, relax, and let's get the show on the road. Right guys, so let's get started on the QQQ, which is NASDAQ 100 here, and let's see, last week we have dropped about 7.45%. We have broken down this 200-day moving average. Now we're just beneath this support here at about $360. Our MACD over here is still in that bullish momentum, but rotating down, and our stochastic is in the oversold territory. Now I don't want to spend too much time on each index. Maybe I'll do another video in the future. Let me know if you'd like me to do this. This is more of an overall, just broader market and kind of what to expect. So now let's go over to the S&P 500 here. So that one is also down about 5.68% on the week. Now we're approaching this 200-day moving average, still in that bullish momentum. Our stochastic, again on the weekly, is down in that oversold territory. Russell 2000, we have completely lost the support here at about that $208, and this is on IWM, which tracks the Russell 2000, but we have broken this and possibly looking to retest this rising trend line here, this line, so we'll see what happens here in the future. Now in this one, the MACD is starting to go beneath this zero line, which is signaling more bearishness, so lots of weakness in the small caps. Now I got this put call ratio that I follow, which tracks how many puts are relative to the calls in the market. And something I want to show you guys is here, if we zoom into this chart here, so anytime we are way up above here, like over 1.0, that means there are way too many puts in the market, and once we dip down below this 0.6, that means there are a lot of calls in the market. Now if you see anytime there is a peak over here, so going back to March 2020, we have this excessive reading, then going to December 2018, then you got one here in April 2018, another one November of 2016. Now if I overlay the S&P 500 over top of it and zoom out maybe a little bit, anytime you have this excessive reading here, it almost correlates to the bottom of the market here. Clicking on here, so you see back here in 2016, that was kind of the bottom, then we went up. Here in March 2018, again signaled the bottom, then we had a rally. Then December of 2018, same deal, corresponds to this low over here, now going to March of 2020. So could this be signaling again that we are coming up to the bottom here, and then this is just a regular pullback? Because as you know, the stock market just doesn't go up all the time. There are pullbacks along the way, and this could be a great time to capitalize on these pullbacks and build up your positions in companies that you've always wanted to. So something to keep an eye on. I believe next week when the Fed has its meeting, you know, some clarity maybe might come out. It's either they'll pour more gas onto the fire and cause the stick to sell off even more, or possibly they'll start to ease the fear, the FUD in the market right now, and maybe this could be a great buying opportunity. So something to keep an eye out on. Now let's go down these charts. So again, we looked at the major indices. Now everything's down, as you can see, and this is as of close Friday, January 21st. Right, so let's close this down and let's make our way down the list here. So let's take a look at commodities. So commodities right now, again, oil is the only bright spot. We have been rising over here. Gold, let's see, gold is in this consolidation pattern, which it has been around that 1780 since, let's see here, like March of 2001. We seem to get bought up every time, so keep an eye out on gold. I do think that mining stocks could be a great investment here in 2022 and 23. So that's where I've been allocating a lot of my money here. Silver had a nice week over here. I believe it's up 5.79% on the week. So again, testing this 200-day moving average, strong support at about that $21.70. So again, gold, silver, any kind of commodities like that, I think will do well in this high inflationary market. Now going down, my RSP account definitely took a big hit this week. You know, lots of losers, especially with Lightspeed. Lightspeed's just been killing me here. I've been buying the dip, but the dip just keeps on dipping. But that's just the way it is, you know. It's I love making videos when the stock market goes up, but the reality is the stock market also does go down. And like I said, instead of looking at it as a great disaster or anything like that, look at it as a opportunity, you know. Look for these stocks that you think will do good in the next 3 to 5 to 10 years and build up positions in them. So going down here, so miners, like I said, they didn't escape this carnage here, but we have some of them. See, Yamana Gold, you know. Miners are the only stocks that seem to show any kind of support here, any kind of strength, even though you don't see this big spikes in price. You do see some support, and they haven't been crashing like tech or like the small caps and stocks like that here. So let's make a way down here. So we got some lithium miners. So these were down on Friday. Livent Corporation, they're pulling off their peaks here just underneath the 200-day moving average here. Uranium, so uranium is something I want to do in the future here. I want to put out a video because I do think that the market is heating up here and that possibly we could be looking for some nice returns here in that 3 to 5 years, especially with the sentiment changing around the world on uranium. They're starting to see it as a clean source of energy. So some of the big producers are Cameco here. But again, we are beneath that 200-day moving average here. If I zoom out, our MACD does look pretty bullish still has that bullish momentum on its side. The stochastic is rotating off of that oversold, and all of this will be on the weekly chart, so I won't be going too much in detail. But if there are any kind of stocks from my list or anything else you guys like me to discuss in the future, leave me a comment below and I will make that happen here. So Cameco I really like. Uranium Royalty Corp is another great uranium company that I've been buying a lot of shares in and building up my position. Now, as you can see, we have just dipped below this 200-day moving average this week. I believe we're down about 19%. So again, if you're the buying the dip kind of person, great opportunity. I'll probably be looking to add more shares here, about that $2.35. Hopefully we do start finding some support, but again, uranium I do think has a bright future. Oil and gas, so you see Nutrien has been running up and so far looking good, about the 200-day moving average. Lots of bullish momentum here, just rotating to the downside here. Let's see, Pembina is looking kind of flat here, looking sideways, so not as bullish as Nutrien here. Canadian Natural Resources, these guys have been peaking here and spiking again. Here we're sitting almost on that overbought though, and the MACD is in that bullish momentum, so that is good. Cannabis, now this industry has been completely getting decimated. Now if you guys seen my video, I did one I think back in October, November, talking about Canopy growth. It is one of my, I don't want to say favorite, but it is one of the industry leaders that if I do put any kind of money, this is really the only company I've been building up a position here though. However, we did completely lose this support here at $13 and looks like we're going all the way down to $7, but I'm hoping we start to see some support here. And maybe with this bleeding so much, this could be a great opportunity. Again, think long term. Investing in the stock market is not a race, it's a marathon. You got to think at least 3 to 5 years out there. So going to transportation here, so Plug Power again had this strong support here at about $25. Looks like we're breaking that down. We do have that bearish momentum starting to form on the MACD, on our stochastic, down at oversold. So you'll see this almost a pattern here where stochastic is sitting in that oversold territory on almost every single stock. So here we can go to FedEx FedEx is rotating off of this 200-day moving average. This would be nice to put in a bear call spread. Seems like these are the only kind of trades working out in my favor right now. This is where you call the top and you let time decay work in your favor. If you guys would like me to do a detailed video on my bear call spread strategy and how I'm making money by calling the tops on these stocks, let me know in the comments below. Now moving along here, so we got a Delta. Delta seems to show some weakness here again below this 200-day moving average. I believe I was reading somewhere the other day that over 50% of the NASDAQ 100 stocks are beneath their 200-day moving average, which is very bearish here in the short term. So here, let's see, Boeing again rotating here off of that 200-day average, going to the downside. We do have that somewhat of a bearish momentum on the weekly and some room to the upside here. So Boeing might just consolidate here for a bit. Tesla dropped 5% on the day, but we're still above the 200-day moving average. Some room for this MACD to rotate lower here. XPeng, let's see how XPeng's been doing. So this one is actually not looking that bad, sitting on that 200-day moving average right now. We do have this bullish momentum on the MACD and a little bit more room for the downside here on XPeng. NEO sitting at 27 and 35 cents here, so beneath this $33 support, and looks like we're making our way down possibly into $20, so staying away from NEO for the time being. We got our solar companies here. So Jinko Solar, these guys, not too much happening here, just kind of flat. Looking to buy probably down around that $28. Let's see, Enphase has sold off quite a bit here in the last couple of months here. Again, we're just breaking this support at 137, so possibly next support zone is definitely around here like 117, and if that doesn't hold, then seems like another support around that $95, and then eventually down into the 60s. So keep an eye out. I do like these guys for long term. Again, something to build out a position in. We got a SunPower Corporation. These guys are down about 17% on the day and testing this support at $16. So we'll see what happens with these guys. BioTech, not too many. I do follow CRISPR. I've been buying these guys, but again, downward momentum here. Lots of bearishness on the weekly MACD. And looks like our stochastic does have room to go lower, so I probably won't be adding anything on CRISPR here until we possibly revisit the 50s, the 40s here, just to try to dollar cost average. Let's see, utilities, they've been doing okay. Consumer services, so Peloton, if you guys haven't heard, Peloton has suspended production of their treadmill and their bike, so they had a huge down day. Now 11.73% might seem like a nice bounce up on a day, but these guys are trading almost at its all-time lows here, so I'd still be staying away from Peloton for a while until the sentiment changes here. Not looking good for these guys. Beyond Meat sitting down at that $61, $62, so again almost at all-time lows here for Beyond. And as you can see, we had a little bit of a rejection here off of that support here, which was actually resistance at $73, and looks like we're selling off. Lots of bearishness here on our MACD, and our stochastic has room to move up, so could be a nice time to get into Beyond Meat if you believe in the whole vegan and the plant-based movement here for the next 5 to 10 years. And definitely getting in at about $61 is actually a pretty good price here. So now let's keep on moving. Airbnb, these guys are down. Let's see what else is here. Carnival Cruise down in that $20, getting rejected off of the 200-day moving average. As you can see, I do have some price targets here in mind for a long-term investment, but we'll see what happens in the short term here. Maybe find that support again at around $18. Now, Disney getting decimated on the news of Netflix. So Netflix had an awful guidance here. So even though their earnings actually was a beat, their guidance for the following quarters isn't that good, and that has caused a lot of these other streaming services like Disney, Roku to just sell off on that news. And also we do have a gap here on Disney that will probably get filled in the near future. And then looking to get in at about that $120, I think would be a nice entry point on Disney. Let's see, Roku. So as you can see, you got the double top, and then ever since then we've been selling off though. However, if I zoom out, we do have the strong trend line here that you see, a couple of reactions here along the way. Now we have dipped beneath here, you know, on few occasions back here lately in 2020, but then we did find support. So let's see what happens here. This trend line could be approaching bottom on Roku here, and maybe look for that support somewhere around $114, $115 here might be an attractive price to start building in a position in Roku. Moving down, we got Costco. Costco is still above this 200-day moving average, probably gonna try and test it here, but look at that MACD, it's so overextended here, so we do have quite a bit of room to come back down. Let's see now, Amazon, again, broke this strong support level here, going back to like August of 2020. Seems like we've been getting bought up here around that 3,000 to 3,100. Now we just completely blasted through here beneath that 200-day moving average. The MACD has finally rotated to the zero. You see this overextension right here, so that took almost a year and a half for this to come back down. We have that stochastic sitting flat now, so Amazon could be attractive, right? So again, think of these pullbacks as a sale at your favorite store. You know, if you're looking to buy a laptop and the laptop went on sale for 30-40%, I'm pretty sure you wouldn't be mad, you'd be pretty stoked about it. So that's the same way I try to think about this pullback in the stock market. Instead of looking at it as a disaster, maybe this is a great opportunity. So now ChargePoint has completely lost that support here at about 1775, and going back to revisit, I believe, $12, but starting to get really attractive. You know, at $12, the EV companies, those chargers, they could be doing really good. So again, that long-term investment, 5 to 10 years, this could double, triple, maybe even 4x, you know. So again, take advantage of these sale prices. Alibaba is sitting at its all-time, well, not an all-time low, but we're sitting at a strong support here, so we'll see what happens with Alibaba. Apple's selling off, but still looking pretty strong here. Let's see what happens down around that 150. Again, we need this MACD to come back a little bit lower, the stochastic to come back a little bit lower here. So still more downside on Apple, I believe, which will drag down the S&P 500, NASDAQ 100 with it, you know. So definitely maybe a little bit more room for the next month or two, but it could be one of those, like, you know, they say buy the rumor, sell the news, where this is the other way around, where you sell the rumor and then buy the news, meaning that once they actually raise the rates here in March is the expectation, and we'll see what happens next week here. I mean, if they unexpectedly raise the rates, that'd be a huge rug pull in the stock market. I don't think we'd be responding really good to this kind of news. So again, look for that taper first, and then in March, raising the rates. And I know there are analysts predicting that they could possibly raise the rates 4 to 6 times. Personally, I don't think that's going to happen. Like, we're just talking about tapering and about raising the rates, and you see what kind of havoc it's causing on the stock market. So I'll be surprised if honestly they raise the rates more than twice this year. But again, I don't have any kind of crystal ball. This is just my opinion, because I think they're gonna try to do whatever is best for the stock market. They'll try to cause this pullback, because again, you don't want to have that straight parabolic move. You do want to have a little bit of a pullbacks along the way. But also, I don't think the Fed is looking to crash the stock market yet, at least. So they'll do whatever it takes to support it. Now moving down here, let's see Nvidia. So Nvidia looks like a nice sale here. We're looking at about, let's see, from all-time highs, about 32% of a downside, so 30% sale here on Nvidia. You're looking at lots of reaction here off of that 200-day moving average. So could the same happen right now? You know, we just get a nice buying opportunity. Now, as you can see, the MACD is rotating down. Again, this overextension, not healthy to see. So let's see that MACD come back down, and you do see the stochastic down in that oversold territory. Now technology here, just quickly flying through here. So Lyft is kind of sitting at a support here, but there is this gap that I do believe will get filled eventually. So Lyft, I think, has more room to go down, possibly down into the 20s here. Let's see here, Zoom, I know these guys have come back tremendously off the high. So let's see, since the peak here in 2020, they're down about 73%. So no Kathy Wood, I don't know if she still has a position position in Zoom, but you did have a pretty large position in them, which is causing ARK to sell off quite a bit. But again, you see this support here that I have highlighted probably back from like 2020, and now we're revisiting these levels here at 155. So it could be a nice opportunity. Again, I'm not a huge believer in Zoom, so I'm staying away from these guys. Twitter, let's see what's going on with Twitter. So Twitter, again, breaking this support here at about 40. Next possible support, well, looks like lots of action here along that 30 bucks here. So a little bit more a downside here, and let's see what happens at 30. A Lightspeed. Guys, if you want to see a detailed video on Lightspeed, I put one out, I believe, 2 weeks ago now, but I do believe that the bottom is coming near, but I am definitely hesitant to say that because this thing could fall all the way down to like the teens, maybe even 10. So we'll see what happens here. If we like find no support here in the next week and we just keep on selling off, then yeah, it's not looking good for Lightspeed and more downside ahead. But check out that video. I'll probably post a link here at the end of this one. So Matterport, these guys are down to like $10. So again, an epic downfall here from the highs of about $37 down to $10 now. So you're looking at all-time lows here. Let's see, Shopify, 13% down. Again, revisiting this support here at about $890. Let's see what happens with Shopify. Great company to own, so something you could start building up a position with these guys, right? So again, you're looking at a discount of about 49%. So think of it as a 50% sale from November here, right? And Netflix, so these guys have, like I said, completely missed on their future guidance here, and this has caused the stock to sell off 24% on the week. So hopefully this isn't an indication of things to come in the future for these other streaming companies, but definitely not a good sign for a big company like Netflix to see this crazy move down. Now financials, they've been doing okay. Crypto here, let's quickly take a look at crypto. So Bitcoin is moving down towards that $30,000. And again, guys, check out my video on the cryptos. I kind of highlighted when I want to start getting in and when I want to start building this position, so that is still valid. And 30,000 is the first area that I'll be looking for that support. Do we start to bounce off of here? If we do, start buying a little bit at a time. If we go lower, which is possible, we could honestly go down to like 13,000, even down to 10,000, you know, if things really hit the fan here. So keep an eye out on that. Now Solana, these guys are down 20% just today, so 40% on the week. Matic, these guys are down about 37% here on Matic. Ethereum's coming up onto that $2,000 price target here. So this could be, again, a nice buying opportunity here on these guys. And then here are just all the options that I have open currently. And these guys are looking bad. By some of these are a bear call spread. Now again, if you want me to do a detailed video on how I set up these bear call spreads, then let me know in the comments below. But overall, the stocks aren't looking that good. There's lots of FUD, fear, uncertainty, and down in the stock market right now. Again, this could be a great buying opportunity, but also you gotta know what your financial situation is and what kind of risk you're willing to take. But thank you so much for watching this video. If you enjoyed it, then take a look at my crypto take right here. And if you enjoyed that crypto video, then make sure to check out my Lightspeed video. Now, thank you so much and see you in another episode. Ciao, ciao.